Hello, everyone. Andrew here, and I want to talk to you today about a headline that I just read. The headline was basically auto loan delinquency rise to highest level in a decade as borrowing costs rise. And what I'm going to talk to you today about is how that affects the economy in general, how that affects you and me. By trade, I'm actually a real estate agent, so I'm already seeing what's happening in the housing market because of these high interest rates and the inflation that people are facing. And every day, there's more and more signs of bad things to come for our economy, and these red flags are out there, and people I think are not really paying attention or not noticing those. So I've made several other videos already that talk about the interest rates, mortgage rates, and inflation and what's happening with inflation. So if you do me a huge favor and subscribe to the channel, like this video, and go back and watch a couple of those other videos about what's actually happening with the inflation rate and with the housing market, because like I said, it's all of these together are smaller signs, but when you look at them all together, it's this big red flag of what's happening. Almost every time that you see any news at all, there's just subtle signs that there's these cracks in our economy, and it's going to lead to a crash. It's going to lead to, I think, a much bigger recession than what is being predicted. Interest rates are continuing to rise, and they may slow the amount that they're raising the interest rates, but they're not going to stop raising the interest rates, which is going to just mean more hardship for everybody, whether it's buying a home, buying a car. I'm going to talk today about what's happening with the auto industry and the car industry and the loans on vehicles. Because what's happening, like I'd mentioned, it's the highest rate for delinquencies. And what I mean by delinquency, TransUnion right now, they state that there's over 200,000 loans that are delinquent. And a delinquent auto loan is a loan that is more than 60 days late in its payment. So they're 62 months behind in their payment. That's going to be a delinquency. There's currently over 200,000 loans that are in that delinquent status. Part of that is because there was different programs during the pandemic that delayed you having to make your payments on your vehicles, and now those payments are starting to come due again, and so people are getting delinquent on them, because what's happening is inflation is rising higher than wages are rising. And when people are forced to make a choice between when they're going to buy gas for their car, or they're going to buy their groceries or make their car payment, unfortunately more car payments are becoming delinquent because everything else is costing them so much. So it's really scary, because you have not only the rise of the cost of the car itself, new cars and used cars both, but also the cost to finance a new car or a used car. Right now, the average interest rate to finance a new car is 5.2%. And remember, just a couple of years ago, all the car companies were offering 0% financing, and people were getting these loans at 0% financing, so your payment was considerably lower. So a new auto, the average is 5.2%. Sorry, and the used auto, the average is 9.7% for the financing rate on that. And because the cost of them have gone up so much, more companies are now offering a 7-year option instead of a 5-year option on refinancing that loan. So if you do have a used car, you're going to be paying a much higher percentage rate for it, that 9.7%, for a longer period of time. So you're even going to pay more for the vehicle than you were before. And then again, the cost just of the vehicle itself to finance the vehicle, and the rising cost and just maintaining that vehicle, and the insurance and the gas are all going up. And when that happens, it just hurts our economy. And that's why you're seeing more of these loans go into a delinquent status. There's actually been a surge in what they call the average monthly payment. The average monthly payment for a new vehicle right now is actually up 19% year over year since last October. So if you had bought a vehicle last year versus this year you're paying 19% more per month for that vehicle. And that is what's going to start. It's going to be snowballing into even more of these loans going into delinquency status, because people are just paying more than they can afford. And the Federal Reserve keeps stating basically that they need a higher unemployment number before they'll stop the interest rates hikes, because they believe that more unemployment is what's going to stop the inflation, because it's what they call, like I mentioned in the previous videos, demand destruction. If more people are unemployed, they won't be able to purchase goods. That's just their goal. And unfortunately, they state it different ways. They call it a uh, re I'm sorry, lost my train of thought there. But yeah, but like I said, the Federal Reserve has stated in fact, they want a 4.4% unemployment is the target range they're looking for, where we're at about 3.5% unemployment right now. And they believe when unemployment goes up, when more people are out of work, when more people have lost their jobs, then the inflation will start coming down. But what's also going to happen as more people lose their job, more people are going to be delinquent on their loans, whether it be their home loan, their car loan. There's going to be more delinquencies. So it really is an indicator of the real economic pain that people are facing right now. It reflects job loss, weak wage growth, and the consequences of high inflation. That's what is leading to all of this. And like I'd mentioned, this is just one piece of the puzzle of what's happening right now. So if you like this video and it's giving you some helpful information, please give me a like, subscribe to the channel, go back and look at some of the other videos I talked about when I talked about the effects of inflation, what's really happening with inflation, because we're being told a much lower number for inflation than what it actually is. And that is basically just, for lack of a better way of putting it, is our government manipulating the numbers so that it doesn't look as bad as it is. They just pick certain items that they're going to compare for the inflation process and not really reflect the numbers of what people buy every day. And I've got a complete video on that. We'll tell you more about that. But the fact that all of these loans are going in delinquent status for new cars and used cars both is really a red flag for what's to come for our economy. I believe we're going to see, with this housing market that's already crashed, with inflation continuing to going up, with auto loan delinquencies increasing, we're going to see a recession much worse than what most people are telling you. So just, it's one of those things we need to be prepared for. I keep saying, hey, we're all in this together, so let's get through it together. Again, please like, comment, and subscribe. It means a lot to me. Thank you very much.